Risk appetite. Now, this is when the economy is doing good and persons are willing to take risk. Okay? So, if we have a stream of good economic data, this may cause risk appetite in the market. Now, risk aversion is when the economy is not doing so well, and as a result, persons are not willing to take as much risk. And we can have risk aversion after a series of bad economic data. Okay? So, if we have a series of good economic data coming out of the US, this may cause risk appetite. And if we have a series of bad economic data coming out of the US, this may cause risk aversion. Also, other things like geopolitical news and other stuff can cause risk aversion and risk appetite. Now, when there is risk appetite, some traders will tend to invest in currencies with higher interest rates. For example, the Australian dollar. And this is because their central bank pays more interest. Okay? So, whenever there is risk appetite, we will have a rise in certain currencies. For example, whenever we have risk appetite, we can expect to see a rise in the Japanese dollar. Okay, and we will discuss this further on in the course. So, for example, you might see very good news coming out of the US, and as a result, the Australian dollar rises. And this is simply because whenever we have risk appetite in the market, traders are more willing to risk, investors are more willing to risk, and as a result, they may invest in currencies with higher interest rates. Okay, so that's risk appetite and that's risk aversion. These are two important tools that you can use to help you whenever you're trading Forex. Now, section recap. Now, whenever you're trading fundamental analysis, you should always understand the cause or the potential cause of the move using the news sources. Okay? Always try to identify the cause of the move. The next thing is you can use correlation to help you to decipher the potential outcome of a fundamental announcement. Okay, remember we can use the retail sales to give us an idea of what to expect for the GDP, and we can use the ADP report, and we can use the employment aspect of the PMI to give us an idea of what to expect for the non-farm payrolls. Okay, so fundamental correlation is something that you can use to make money trading Forex. Now remember, moves caused by change in market sentiments are temporary, and once the fundamental picture is the same, the market should continue in the same direction. The market should continue in the direction of the fundamentals. If the fundamental picture is bullish, the market should rise. So move caused by sentiment are temporary. And always remember that anticipation is key. The market is mainly speculative, so understand what the market is anticipating and you will make money trading